Welcome back to Investing Talk Podcast. Today, we're tackling a question many of you might be asking about a company that's seen, well, a lot of recent activity. Is SINTX Technologies a good time to buy now? We're going to explore the latest information, pull out the most important insights, and help you understand what's really happening with this company.
Yeah, we've gathered an array of sources from financial filings to market reports to try and give you a comprehensive picture, looking at both the opportunities and the risks so you can make an informed decision for yourself.
Absolutely. And before we jump in, just a quick reminder. If you're finding these discussions valuable, please hit that subscribe button, give us a like, maybe leave a comment. And hey, if there's a specific company you'd like us to look into next, definitely drop its name in the comments below. Your input really helps us tailor these discussions for you. Okay, let's unpack this company's journey over the past few months. It's been quite something. SINTX Technologies has been incredibly busy. Our sources indicate a rapid repositioning in the advanced medical device sector. What kind of changes are we really looking at here?
Well, what's fascinating here is the speed and scope of the strategic realignment. It's not just tinkering around the edges. Over the past quarter, SINTX has undertaken major shifts in leadership, executed significant R&D milestones, and really sharpened its commercial focus. This isn't just minor adjustments. It feels like it's a significant transformation.
Okay, a transformation. Let's break down some specifics from our sources, maybe starting with September 2025. There was a comprehensive business update issued on September 3rd.
That's right. It emphasized progress post-strategic realignment and the integration of SINTX, really reinforcing their commercialization agenda in medical technology.
And didn't they also announce an FDA approval around then?
They did, yeah. A successful FDA device approval, which actually led to an 8.97% stock surge. And this expanded their biomaterial platform with silicon nitride surface coatings on trauma plates, and it was backed by a peer-reviewed study, which adds credibility.
Right, credibility. And the stock itself showed some pretty wild swings.
Oh, definitely. Notable volatility, with intraday moves above 30% on news of bioceramic technology advancements and, positive market reactions to its latest product and structural realignment.
Okay. Moving back a bit to August 2025, the activity didn't seem to slow down. On August 15th, SINTX publicly detailed its operational restructuring. What did that involve?
Yeah, they laid it out. New leadership, streamlining operations, divesting non-core assets, and a focused commercialization strategy, all aimed at accelerating growth.
And they completed an acquisition too, SINTX Surgical Assets.
Correct. That acquisition deepened their footprint in foot and ankle fusion applications, which is a market opportunity estimated at a pretty substantial $1.3 billion.
Wow, okay. $1.3 billion potential. And there was a study published in early August too.
Yes, a breakthrough study on silicon nitride coatings applied to CFR Acadie trauma plates. That added significant validation for their next-generation biomaterials business, gives them more scientific backing.
So if you connect the dots here between August and September.
Well, if you connect this to the bigger picture, these moves in August and September show a clear intent. They're shedding non-core assets and focusing intensely on these high-value medical technology segments. It's a common strategy, really, for companies looking to carve out a niche and hopefully accelerate growth, concentrate the firepower.
Makes sense. And looking back even further to July 2025, our sources highlight the very beginning of these changes. SINTX concluded the reacquisition and integration of key IP and assets around silicon nitride medical applications.
Exactly. Further streamlining for focus, they were bringing things back in-house, consolidating.
And rolling out operational changes for cash flow.
Early operational changes were rolled out to enhance cash flow and capital efficiency, aiming for a leaner business model overall.
And leadership changes signaled the start of this turnaround effort.
Yeah, market positioning and leadership changes, including board and executive overhauls, definitely signaled the start of an aggressive turnaround effort back in July.
Okay, so what does all this recent activities, flurry of moves, what does it mean for you, our listener?
It means SINTX is a company in motion, very much so. The past 3 months illustrate a company aggressively pursuing growth and innovation in a specialized field. For potential investors, really getting a handle on these foundational shifts is crucial for evaluating its future. You need to see the strategy behind the headlines.
Right, understanding the why behind the what. Okay, that covers the strategic side. But strategy needs funding. Here's where it gets really interesting. Let's talk numbers and how SINTX Technologies stacks up against the competition. Our sources paint a very specific financial picture.
And this raises a really important question. Can the company's financial structure actually support these ambitious strategic pivots we've just discussed?
Let's start with their revenue and earnings. What are the headline figures? For the fiscal year ended December 31st, 2024, SINTX reported total revenue of around $9.74 million, but a net loss of $12.1 million. It's quite a gap.
It is. And what's more, the gross profit margin was negative.
Negative, meaning
Meaning the cost of revenues outpaced sales. Basically, they were spending more to make and sell their products than they were earning from them, even before accounting for R&D, admin, all that. It reflects serious challenges in scaling production and moving from R&D to market effectively.
okay, that's a tough spot. And earnings per share.
Still negative, it continues a multi-year trend as the company invests heavily in advanced ceramics and these novel medical products.
So future earnings projections are uncertain.
Very uncertain. Management seems focused squarely on pipeline expansion, not necessarily immediate profitability. That's the bet they're making.
That gives us a snapshot of their performance. What about their overall financial health, like the balance sheet stability?
Yeah, the financial health details are critical for understanding the company's resilience, especially with all this change happening. As of December 31st, 2024, cash and cash equivalents stood at just $4.3 million. Pretty slim.
And debt.
Total debt was $5.9 million. That resulted in a debt-to-equity ratio exceeding 1.
Which is considered high for medtech.
Generally, yes, especially for a company still in this growth phase. It suggests high leverage.
And operating cash flow.
Negative. About $8.7 million outflow for FY 2024. Reflects ongoing investments and those operational losses we mentioned. They're burning cash.
What about their ability to meet short-term obligations, the current ratio?
That was below 1, specifically 0.83. That suggests potential liquidity pressure if unexpected short-term bills come due. Tight.
But there was that asset sale in June 2025 to SINTX Surgical.
Right. That did bring in some new capital and a private placement. It boosted balance sheet flexibility, temporarily at least. But future dilution is definitely possible, especially with warrants tied to milestones.
Okay, so on one hand, we see strategic growth, potential innovation. On the other, some pretty significant financial challenges.
Yeah.
How does SINTX position itself competitively?
Well, SINTX specializes in these advanced ceramics for medical and industrial uses, particularly implantable medical devices. That June 2025 asset purchase agreement expanded their pipeline into foot and ankle implants, linking potential upside to FDA approval and sales milestones.
That they're up against giants.
Absolutely. They face significant competition from much larger orthopedic device manufacturers, think Stryker, Zimmer Biomet, huge players. SINTX's scale is small, they lack broad distribution, lack brand recognition, big hurdles.
So their angle is the niche.
Potentially. Their proprietary materials and these recent acquisitions could position them for select niche growth if their pipeline execution is successful. It's a big if.
This paints a clearer picture for you, our listener, about the financial tightrope the company's walking while trying to innovate and grow. High stakes. Beyond the fundamentals and the strategy, let's look at the market's pulse. What do our sources tell us about SINTX Technologies' price action, technical indicators, and overall investor sentiment?
Yeah, this segment helps us understand how the market is reacting to all those fundamental changes and strategic moves. What short-term signals are emerging?
Our sources indicate specific price action as of September 5, 2025. Where was it trading? SINTX was trading between $5.90 and $6.30 USD. Seems like the volatility reflects that deal news and the insider buying we touched on.
Exactly. And the support level seems to be identified around $5.25, $5.75, following that recent bounce after the insider purchase and deal announcement.
And resistance. Where's the ceiling people are watching?
Resistance looks to be between $6.50, $7.10, representing prior local highs. So a defined range for now.
Okay. And what about the technical indicators and trends? What are the charts saying?
Well, the 50-day and 200-day moving averages are sloping upward after that Q2 deal news, which suggests some recent bullish momentum. However, it's important context, they're still below long-term averages because of the overall volatility and past performance. So recent improvement, but still climbing back.
And the RSI? Overbought? Well, oversold.
The Relative Strength Index, or RSI, is near 5761. That's sort of mid-range, indicating neither overbought nor oversold conditions right now. But again, volatility remains elevated, so that could change quickly.
What about the MACD?
The MACD showed a bullish crossover in late June 2025. That coincided with the asset purchase news and the insider buying.
So a positive signal there. What's the overall trend picture?
Overall, the short-term trend seems cautiously bullish based on these recent signals, but the long-term trend remains challenged by those multi-year losses we discussed earlier.
Okay, some cautious optimism from the technicals. What about recent news and overall sentiment beyond the charts?
Well, the big news was June 23, 2025, that definitive asset purchase agreement to acquire Synaptic Surgical's foot and ankle implant assets. Like we said, that deal boosted their pipeline and provided capital through warrants and a $750,000 private placement. Very significant move.
Any analyst action? Upgrades, downgrades?
Not really. Haven't been major analyst upgrades or downgrades reported. That's pretty common for microcaps like this. They often fly under the radar with sparse coverage.
But there was that insider purchase.
Yes, Director Mark Lewis Anderson's purchase of 10,000 shares at $3.30 on June 18, 2025. That's generally viewed as a positive sentiment indicator. Suggests confidence from someone on the inside about the company's direction. Skin in the game.
Right. So for you, our listener, this part of our discussion shows how recent events and market signals are perceived, offering another layer of insight beyond just the raw financial data. All right, we've looked back at where SINTX technology's been and where it stands today. Now let's turn our attention to what's coming next. What catalyst should we be watching out for in the coming months, according to our sources? What could really move the needle?
This is crucial for understanding potential price movements, right? Upcoming events, both the scheduled ones and the more speculative stuff, can significantly impact investor sentiment and the company's trajectory.
Okay, let's start with the next 3 months or so. What's on the calendar? October 30, 2025. That's the Q3 2025 earnings release. Big one.
Huge. It'll provide the first comprehensive look at the impact of all this recent restructuring, the R&D milestones, the Synaptic acquisition integration. Markets will be really scrutinizing statements on pipeline progress and any signs of margin improvement or lack thereof.
Then November 8th, ETF rebalancing.
Yeah, could be relevant for a small cap. And November 25th, the holiday season medical market report might offer some sector-level insights.
And December 16th, institutional 13F filings.
Right. That's when we see if the big money is buying in, selling out, or holding steady. Reveals shifts in institutional confidence.
And looking into early next year, January 27th, 2026.
That's the Q4 2025 preliminary earnings update. Should offer early indicators of whether commercialization and manufacturing scale are improving.
So these events, especially earnings, could really crank up the volatility.
Absolutely. They're key inflection points. Any surprises, positive or negative, could amplify volatility, especially if large funds adjust their holdings based on the news.
Beyond these scheduled events, our sources also mention some intriguing rumors and speculative catalysts. What's the chatter? One rumor suggests a potential OEM partnership in Europe.
Yeah, that could open new channels for their silicon nitride implants. Could be significant if it pans out.
And talk about pursuing breakthrough device designations.
Industry chatter suggests they might try for that for next-gen trauma products. That designation can shorten time to market, which is a big deal in medtech.
Market speculation about another equity raise.
Always a possibility when cash is tight and ambitions are high. Could announce a strategic equity raise, maybe a secondary offering to strengthen the balance sheet for new product launches. Comes with dilution risk, though.
And buyout rumors still floating around.
They persist, yeah. Suggesting acquisition interest from larger medtech players may be spurred by the recent IP consolidation and positive OEM feedback. Always speculation, but something people watch.
Okay, and just to recap some key upcoming catalysts we've identified. Short term.
Short term, it's really the closing of that Synaptic surgical asset acquisition, which hinges on getting that FDA 510(k) clearance. That's a major milestone event. And, of course, the Q3 results.
And longer term.
Longer-term catalysts include hitting those cumulative revenue milestones from the newly acquired assets that could trigger warrant vesting and royalties. Also, crucially, getting FDA regulatory approval for new implant products to really unlock distribution and revenue growth, and potentially strategic partnerships or even further M&A activity that could reshape the company's scale within its chosen medtech niches.
So for you, our listener, understanding these upcoming events, both the confirmed ones and the rumors, is vital for anticipating how SINTX technologies might evolve and react in the market. Lots of moving parts. So what does this all mean for someone considering SINTX technologies? We've seen a company undergoing massive transformation, exciting product developments, but also some significant financial hurdles. What are the key risk factors, and what's the overall investment thesis coming out of our sources?
Yeah, this raises that core question again. How do you balance the clear potential for innovation and growth with the very real financial and market risks? It's a tough balancing act.
Let's look at the stock-specific risks first. We've mentioned the losses in cash flow. Our sources point to persistent net losses and negative cash flow. That puts pressure on the balance sheet, right? And might mean more financing or dilution down the road.
Exactly. It's a constant pressure. Plus, the company's small scale and its reliance on successful asset acquisitions and these regulatory milestones, it means things like FDA approval aren't guaranteed. They could be delayed or denied, which would be a major setback.
And potential dilution from warrants and placements.
Yes, that's tied to the acquisition milestones. It's part of the financing strategy, but it can impact existing shareholders if those warrants get exercised.
What about broader market and sector risks? Things outside SINTX's direct control.
Well, the medtech sector itself faces heightened regulatory risk that's always there. Reimbursement uncertainty from payers is another factor. And as we said, intense competition from much larger established incumbents. Tough neighborhood.
And market volatility.
Yeah, broader market volatility can hit small cap, low liquidity stocks like SINTX more acutely. They can swing harder on general market sentiment.
Okay, so factoring all that in.
Yeah.
Our sources provide an overall investment rating for SINTX Technologies.
Yes, the overall rating provided is a 4 out of 10.
A 4 out of 10. What's the reasoning behind that specific number?
The rationale highlights that SINTX offers promising niche product expansion, especially in advanced ceramics and those foot implants, and that's validated somewhat by the recent deals and that director insider buying. That's the positive side. However, the persistent losses, the high debt levels, the ongoing cash burn these present major financial risks. Big red flags. And the pipeline execution isn't fully validated yet by necessary FDA approvals or consistent commercial traction, still proving itself.
So technicals show a short-term rebound, but...
Right. While technicals indicate a short-term rebound potential, the longer-term trend remains challenged by those fundamental profitability and liquidity concerns. High risk, potential high reward, but tilted towards risk right now.
And finally, what's the recommended investment horizon for a company like this, based on that assessment?
It's deemed most suitable for short-term trading, particularly for catalyst or event-driven strategies trying to play those news events. The risk profile is just seen as too high currently for long-term investment. You'd need to see sustained financial turnaround and those key regulatory milestones hit for durable upside potential.
This has been an incredibly detailed look at SINTX Technologies.
Yeah.
You've heard about the exciting strategic shifts, the ongoing financial challenges, the market's current pulse, and what's potentially on the horizon.
Ultimately, understanding these interwoven factors, the good, the bad, the uncertain, is key for you to form your own perspective on SINTX.
What a journey through the recent developments and future prospects of SINTX Technologies. It's clear that while the company is definitely forging a new path in medical technology, it's also navigating some significant financial hurdles. It really is a classic case, isn't it?
It absolutely is a classic case of high potential innovation meeting high execution risk. Very common in this space. For you, the listener, it really comes down to carefully weighing that bold strategic momentum and the product validation they do have against the persistent losses, the debt, and the absolute need for successful regulatory and commercial milestones. They need things to go right.
So here's a final thought for you to consider. Given SINTX Technologies' rapid strategic shifts, all these upcoming catalysts, and its ambitious focus on niche medical technology, how do you weigh the company's innovation potential against its current financial headwinds and the broader market's appetite for risk, especially in the medtech sector right now? Is this the start of something big, or is the risk just too high at this stage? Thank you for joining us on Investing Talk Podcast. We hope this exploration has given you a clearer picture to inform your own investment thinking. We'll be back soon with another detailed discussion.